We're going to go through the cloud system. We're going to go through support and resistance. And we're going to go through the 3, 5, and 8 so that we all can remember this from the previous lesson. I just think it'd be a good refresher. And when I look at what really worked last week, all of these they really gave us an edge. And I just want to kind of walk through that. So, we're always constantly looking for that edge. And frankly, I think we got it last week on this. So let me just walk through this. And what we're going to do here is get rid of these indicators for a moment. And I just want to start here with something as simplistic as the SPY. I'll leave this up. And we're just going to talk about, support and resistance again. And then I'm going to drill into some other avenues. But I just really want to get this out there. So when you see these levels, well, we're going to have to do this to get the tools. So when you see these levels and you see how you're acting at certain levels, okay, you start to develop support and resistance lines. So for example, on this 15-minute on the SPY, when this flipped over, it came back and retested right here. This made it a support level. No different than when this popped up here, this made, right, this attempt, and then the fail, when we cut through, would make that resistance. Okay, now we still have to see how this plays out on Monday or Tuesday rather, but that's the general concept of support and resistance. Now, what's important about support and resistance is not only when it hits, but how many times it hits that level. So I'll give you an example what I mean by that. If we look at this particular level in here, we've hit significantly, right? You've hit, we'll just do it this way. You've hit here and then again, right? And you're unable to break it, right? And you can just see this straight down. That's all I'm trying to do is to show you these areas so that you can just kind of get a sense of this. So just to understand this area, okay, just deal with the concept that anything that is touching more than twice is a definable area, right? And if you get that, then what you want to do is you want to be playing support levels for bounces and resistance levels for sells. Now, that all depends on what exactly you're trying to accomplish. So let me give you a great example of this that did not work. Okay, so this was something that I was really very interested in because I thought it was absolutely glaring. And you have this 97.19 level up there. And what I'm going to do is I'm going to just zoom out for a moment and show you why this level was so important to me. There we go. So that you can see this level and you can see why it was so significant to me. Let me move that up just so it's like exact. And I try to be as exact as I possibly can with these levels because I think that that's really where the juice is. So this to me was a resistance because we stopped right at it last time. We just stopped dead. And that's important, right? So I want to pay attention to that. We stopped dead, bounced. Now, this is on an hourly chart, and we're going to get into the time frames and the best way to use these time frames. But on this hourly chart, for me, coming into this area, I was looking at it and saying, wow, we could really reject here. And if we do, it could be something like this, or something like this. So I'm looking at the potential to hit resistance, break, and then go to support, right? That's my plan. So if I'm to look at that and I'm going to say, well, where could we possibly get to? I'm going to look in this area and say, well, if we reject here, we can possibly get to there. If we reject here, we can possibly get to here, right? And then you can just see how this continues and that you start to define new support and resistance levels. For people that are swing trading or day trading, nothing is going to tell you more than these levels. Nothing. There's all kinds of indicators that we can use, but if you're just out there swing trading or day trading, there's nothing that's going to be clearer than if one of your lines is violated on your trade. It's very simple. Just consider that as pretty much what I consider paramount, right? This is pretty much paramount on top of the list. So you see how we're reacting to these levels. You flip a level. why is that important? Because these are supply and demand zones. Okay. If you start thinking of them that way, we went over this last week, and I would watch that video again, even though we're going to get a little more in depth this week. Supply and demand zones. Okay. That's significantly important to understand, because not only are you flipping, but you start wrapping your head around the fact that it's not whether you're right or wrong. It's the fact of, did we get over a supply zone? And the answer's, in this case, yes, we did. So if you're answering the question that way, instead of saying I'm short and I'm right and it's going to roll back down, okay, what you're saying is, well, currently right now I'm through a supply zone, which means I have demand and I'm short. Do I want to be short when I have strong demand and light supply? And the answer is no, which is why these levels become so important. All right, so now we understand the significance of that, and we've reviewed what we went through previously. Good morning, Dan. And I will leave this out there again for people that are going to watch later, which seems to be a large group. We usually only get a very small percentage in here that actually attends, and it's fine. As long as we have the recordings, we're good. So what I did was I just made a little cheat sheet for everybody. Okay. And let me go through this, and I'm going to just click this off on the horizontal lines for a moment so that we can just focus on it. And I'm going to pull it right here. All right. Let's pull this down, and we're going to pull this up, and you can screenshot it if you like. But this is how I want you to think about these levels. I want you to equate them. And I find that association is the best way to equate things so that you remember them. Support and resistance. There are time frames and rankings to orders. And then there are times when these are best utilized. We'll get to that in a moment. But what I want you to really take away from this is weekly and monthly support and resistance lines. Think of as titanium, meaning nothing is stronger than that. Nothing is going to break that. I use titanium. You could use diamond, whatever you want to use. For me, it fit with building material. So if you look at it from that standpoint, that there is nothing stronger than a weekly or monthly support level or resistance level, nothing. It tells you a lot about when they break. On the daily side, okay, think about it as steel. Like it's very hard for something to get through steel. And when it does, you're probably going to want to pay attention to it. Hours, I broke down into 1 to 4. And I would view those as stone. And then you would have scales of the stone based upon 1 through 4, right? Major minutes are major blocks of minutes starting between 15 to 30. Okay. I don't really use 45 or anything like that. If you could put that in there, think of it as brick. Minor minutes you're going to think of as wood, right? So this is the strength of those levels. And I'm going to give a couple examples of this so that you can see this very clearly. What's going on, Acquisitive? Hey, Justin. So again, you can screenshot this, but this is pretty common, but I want you to understand the significance of it. So when it breaks up or down, that you understand how relevant that is. Now, I'll give you a really good example of this on the financial side. And what we're going to do is we're going to go to a monthly here. And what we're going to do is I'm going to clean all this off. And what we're looking at is just the financial sector. And we have points of interest right here, right? That's a point of interest, right? This is the great financial crisis. Now we come across on the great financial crisis, and we can see that we have held resistance into the pandemic, right? So we can see that very clearly. And now what we're going to do by seeing this, right, is break down and then rallies up. What happens? Support becomes what? Or resistance becomes what? Support. Okay. This is one of the reasons why I was so interested in the financial space. And now you're seeing this bull flag form. This bull flag formed because we held support. Okay. We didn't hold support because the bull flag formed. You follow me? That's why it's so important to understand this and how this works. Nothing is more important than support and resistance lines because they are supply and demand. If I don't have demand for something, it doesn't matter. Could be anything. If I don't have demand for housing, I don't have demand for housing. If I have oversupply of housing, well, then I have oversupply of housing, right? Think about it that way. You're not going to get $500,000 for a Lamborghini if nobody wants the car. Okay. Think of it, just think of it in those concepts of supply and demand. So here we are, and now we have a flag. The flag formed because we held support. We did not hold support because the flag formed. The H pattern did not break because support held. Support did not hold because the H pattern did not break. Nuance, very important. So you understand, instead of looking at the actual symptom, you're looking at the cause. Okay, think of it that way, right? Hopefully that makes sense. So think of this as titanium. Drill down on this on a weekly basis. You can see the level. And for our purposes, we're not really position building out for years. So weekly is going to be just fine to do this with and use this as a weekly level and use this as a guide. Now, this is very simple and stuff that we've all dealt with before, but we're just going to run through them. Now we're going to just kind of look at a daily and go, well, on a daily level, that weekly really is not much that we need to focus on, is it? But if we come out here and we look at a daily up here, well, all of a sudden, what are we starting to see? Well, we're starting to get a resistance point up here that we didn't see, right, on a weekly time frame, which is important for us to grasp. So we would come here and go 1, 2, 3, right? And now what I'm doing here, I'm pointing out here, and what I think is really significant is if you're in a position, let me put that there. I don't know why I did it that way. That's odd. Let me try that again. Not really sure why that happened. Odd. So what I'm getting at here is the more you hit this level, the more significant it is. The more significant it is, the more powerful when it breaks out. So you always want to see, not only do you have support, but how many times was that support held? And we can see in here real clearly that that support was held over 4 times. And that's exactly what we want to see. So, or resistance was held 4 times. Now, on a daily chart, and we have to decide if this line's more important or this line's more important as significance, we know that the weekly is more important than the daily, but it's there and it's something that we have to deal with. So yeah, they changed the route of the ambulances, and I'm not happy. It was a very quiet area and a great area, and I'm just not really happy about that at all. So not really sure why they did that, but and it's a pretty quiet area. So I know I'm not the only one that's been complaining about it. Anyway, see here where you are and you're holding this level in the daily. You need to pay attention to that. Okay. But this has more significance. All right, let's keep going. So now we understand that what a daily would look like. If we went to an hourly on the same, and let's just drill into an hourly here. And what we're going to find is we're going to find other areas on that hourly that are going to be of significance. So in other words, we would note that this area is going to be of significance on an hourly chart, but on a daily chart, it's probably not going to be anything. So here we are knowing that that 3448 is an area of interest. And then we go and take a look at it on a daily chart and it wouldn't even register, wouldn't even be there. And let's just put that line in so you can kind of see what I'm talking about here. So here it is on the hourly, right? And you can see this coming straight across, right? 3448. And let's just pop that in on a daily so that you can see what I'm talking about. And we go 3448, right? And then we'll just kind of go from here. And you can kind of see this area right here, right? But that's not going to get you enough that you're going to look at that and go, well, geez, that's an area I need to pay attention to. But when you drill into it on an hourly, it becomes somewhat glaring, doesn't it? And that all of a sudden starts becoming an area and you start seeing how you're reacting to that area intraday, right? So now we're drilling into the intraday. Again, if you just go out to a 15-minute, you're going to see different patterns again and again and again. So now we have this 35-12 on a 15-minute that is now relevant, okay? And what I like about this and what's so significant about this is once you understand this and you understand the levels of, I guess the best way to explain this is the levels of importance, right? So you have those levels of importance. And once you know what they are, well, then you're really in the driver's seat, right? Because now you can go through them and go, okay, well, I know what's important. I know what I'm supposed to be looking for, but what type of time frame should I be focused on with these levels? When is weekly more important than monthly? When is daily more important than weekly? And I think that that's a really good question. And what I did was I just created an optimal ranking times and use of time frame system that is pretty simplistic, but I think makes a lot of sense for people. So what we're going to do is we're going to just drill into this a little bit, and then we're going to get into some of the other topics. This is very informal. If you have questions at any time, just ask today. It was more important for me to review these concepts so that we could all go over them. All right. So if you are optimal rankings, times to use, time frames, position building. Okay. So then we're going to go through 4 different time frames. We're going to go through position building. Okay. Swing trading, day trading, and scalping. Optimal rankings for times to use these time frames. If you are position building, meaning if you are looking out for months or years, you need to be looking at weekly and monthly as your thought process. That's where you start on the weekly, okay? Most institutions don't start on a daily chart for position building. They start on a weekly chart. That's why it's so significant when we start breaking some of these levels, just FYI. It's why it's so important. So, because if you look at it on a multi-year basis, you can see that the probability of breaking that 200 week is pretty slim, right? And that's what they use as a guide. All right. So they start with weekly for position building. Monthly they do as well, but more weekly. And then we go out and go daily, hourly, major, and minor minutes, right? That's not too hard for us to wrap our heads around. That makes a lot of sense. Now, if we're going to go out there and we're going to look at the next level, which I'm going to refer to as swing trading. But for our purposes, swing trading is going to be anything that is a week. Okay. Anything that is a week to 3 months, right? That is what we're going to review it as a swing trade today, just so you can kind of keep that in mind. So we're going to get rid of this text, and I'm just going to drop this right in here. Now, on a daily chart, right, that becomes optimal, okay? Your swing trade, daily, hourly, major, minor minutes, weekly and monthly is all the way at the bottom, okay? Your 1 minute chart on a swing trade where you're looking at a week is more important than 1 dot of a weekly chart or 0.25 of a candlestick on a monthly, all right? So for swing trading, your major focus is the daily, the hourly, the major minutes, the minor minutes. Now you can execute and trigger off of any of these, but as far as optimal and what you're looking for to see if your setup's optimal, you want to look at the daily, then the hourly, then the major, then the minor, and that's your weekly. Okay. It's just relatively simple, but I think it makes sense to kind of hammer this home. Now, in regards to day trading, okay. Now, day trading to me is going to be 1 day to, let's say, a week, right? Some people are going to say it's a little shorter than that, but I think that if you were in something and something is working exceptionally well and you want to stay in it, that you should stay in it. So here we are with day trading. So your first level of interest is going to be on day trading is going to be the 15-minute and the 30-minute chart. That is your first level that you're going to look at, okay? 15 and 30 is going to be that level that you're going to focus on. That is going to be your bread and butter on these kinds of moves to day trade. And we're going to walk through examples of this in a moment. But if you look at the minor minutes, 1 to 10, Then you'd start looking at the hourly on your day trade, then the daily, then the weekly and monthly. The reason for this is relatively simple. I don't really care where it's going to be in an hour or 4 hours because I might not be in it. Okay. As far as the daily, if it breaks out on a daily, if it's moving to one of these key levels, okay, that could be, very small spot on a daily, a 15-minute bar on a daily chart. There are 26 of them, right? So if there are 26 bars that of 15 minutes there in a daily, does it really matter what I have? Right? It doesn't as much. And then we could get into the weekly and monthly, but that's pretty self-explanatory as to why that's pretty irrelevant. So again, what I want you to understand is just this concept so that you can rank them in order of what they are. If you look at scalping, and I do want to touch base on this and how I view a scalp trade so that people get this. Now, scalping to me is knowing that no matter what, you're going to be out by the end of the day. Okay. That means that you're going to, no matter what happens, you're going to be out of the trade. You're going to be gone. Does not matter. Okay. Most scalp trades, you might be in for 5 minutes, 10 minutes. People construe that as day trading. You can view it however you want. You can call anything you want. To me, it's scalping. You're trying to make $1 and get out of the way. You're just trying to scalp, boop, make a little money and move. Okay. Your major bread and butter, if you're trying to make $1 or $2 on a trade, is going to be a 1 to 10 minute time frame. Okay. Then it's going to be 15 to 30, then hourly, then daily, then weekly. Right. A great example of the day trade and the areas of a day trade on pullbacks are pretty obvious if you take a look at the recent pullback right here. So this is Amazon, okay? And you can see how Amazon pulled right back to that doji, bounced off of it, off the open, and then ripped. I'm looking to see if we're going to fall to this level and then possibly give me an entry at least into that resistance level. Now, if we drill into this on a 1 minute chart and we zoom out of this, okay, and let's do a 2 minute chart so that we get rid of some of the noise. And we drill into this. Well, that gets pretty glaring, right? So now you can see here's a support possible. We never really tested it. Then you come to here, but we didn't test it going to the right. So you come back here and you test. Well, that's support. So the moment that you flip that support level, you confirm that that's support because you've been here twice. Now, whether or not you were just going to gap fill and then retest that level remained to be seen, but that is not what happened. And then you can just see clearly how you're pushing up the whole time. If you're scalping, here's another really good example. Okay, here's JP Morgan. All right, JP Morgan forms our pattern, right? Breaks. And technically, if we want to get super technical about it, that's a resistance level, isn't it? We've hit there 3 times, couldn't reject, we push, right? 2 minute chart. Flips, we think that our resistance level is going to be that close. Now, what matters more here, right? This particular chart on my day trade, or if I go out on a daily, does that matter as much? Does that matter on my day trade? Not really. I mean, it's great that it moved up because we're in it, but does that matter? No. How about a 15 minute? Well, that might matter a little bit more because it might show me some of these levels. So that would matter. Okay. Well, how about the hourly? Well, the hourly, not so much because the move's basically over in the hour that we really tried to capitalize on. So the majority of the move already happened. All right. Well, that's about a monthly. Is that relevant? Not at all. Not even a little bit. Okay. So if you understand that and just those basic concepts and screenshot them, I can post that as well if need be. But if you understand those basic concepts, the ranking system, okay, and the strength of those levels, it's a little bit of a game changer and it's pretty simple stuff. So again, if you have questions, let me know. I'm going to just keep rocking and rolling here and running through things. I'm going to open this up for questions. We could talk about anything that you would like once the formal questions open up when I'm done. But I do want to get through these 3 concepts. As far as support and resistance, I'm hoping that you get it. I'm going to do a more formal video encompassing all this together that I'll make available to everybody. But I really want you to get those concepts down. And I really want you to think about, if you take one thing away from today in this video, I really want you to think about what time frame you're trading off of. And is that time frame the most conducive to what you're trying to accomplish? Okay. I'm sensing that sometimes it is and sometimes it isn't, right? That's kind of why I wanted to bring it up. And, maybe that's on me for not being more specific. And that's why I really want to hammer that very simple point home. Now, here's JP Morgan. Simple enough. Now, these were lines that we used in the past, and I still use to this day. And I just want to walk through the people that are newer here so that they understand these. So you have 3 lines here, okay? The green line is going to be your fast one. That is going to be a 3-day simple moving average. That is a daily 3-day simple moving average. Your yellow line, okay, is going to be your 130 or 5-day moving average. I'll get into the equation in a moment. And then here is going to be your 8-day moving average. Okay. So now you have your moving averages and now you want to go from there. So let's drill into this a little bit more. What do we have here? I have an 8. Okay. Because we know the 8 is purple. I'll never change these colors. I know I do it a lot in the other systems. I will try to stop. But this is your 3, your 5, and your 8. So I'm going to give you a really simple trigger, okay? And it's one I actually was going over with someone yesterday, and it just reminded me of it. And, you have knowledge, and then you wonder when you're going to get the knowledge out, right? But before I even show you this trigger, and it's the simplest trigger in the world, and when you see it, you just execute it. You don't even think, because it's pretty, and you can back test this. So when I say things, you can back test it. You can literally take what I say, go up here to like strategy tester, whether it's on TradingView or here, and click that button and run what I'm saying and build a model and run it on something. I would suggest that you run it on an index, to be honest with you. I think that's the easiest way to do it. But here's what I'm saying, right? We're constantly trying to figure out how to get edge. And the one way to get edge is to just understand what it is that we're looking for and then just try and get ahead of everybody. So these moving averages on here, there are 6.5 hours in a market open. Out of that 6.5 hour, there are 26 15-minute intervals, okay? Meaning that if you were to go through and you were to count all the 15-minute bars in 6.5 hours, every hour is 4:24, right? And then 25, 26. Okay. Makes sense. 15-minute intervals, right? For every what hour. Got it? Okay. The 3-day moving average is a 78. The 5-day is a 130, right? We're taking the components. The 8-day is a 208. So if you want to screenshot this so you have it, I will put this into a TradingView indicator so that you can hit a button and have this whole thing lined up and use it for free. Just give me some time to actually do that. It is on my list of things to do. So just screenshot this so that you have it. Now, what we're going to do is just pull up any stock. Let's pull up Apple. Okay, so here's Apple. Now, if we look at Apple, all we want to do, okay, all we're trying to do is look for very simple patterns when we see these, okay? And seeing it, if we can find those patterns, what we can do with them. Well, here we are with Apple, and you can see the lines and you can see how we're acting, right? This entire time, okay? Now, you can see something that happens here. And I'm going to discuss this so that you get it. You can see the 3 and the 5 and the 8 all cross, right? That's significant. What's more significant about this is not that they're all crossing. It's the order in which they stack themselves, okay? So all 3 of these moving averages that I use, they are all Fibonacci numbers. Okay. 3, 5, and 8 are Fibonacci numbers. And that's really important for us to get. And I really want to stress that. Like you really want to put yourself in a position. Hold on one second. Give me 1 second to turn that off. And I know I just hit something there. What I'm saying here, when I flip there, okay, I want to pay really close attention to that. Why? Because it's telling me that the behavior of humans is changing. Okay, this is nature. Human beings are nature, and I'm trying to get too earthy on you, but so when we see these patterns change, they tend to stay that way for a period of time. So when the 8, even though people are saying, "Oh, I'm going to short up here," and I'm not telling you not to. I'm not telling you not to short into this, because you could use this as a trigger. Here's your 5. Here's your 8, here's your 3, right? So you're below all 3. So you being below all 3 is a trigger. The more prominent trend trigger that I want you to take away from today is when they're stacked. When the 8 is up top, when the 5 is in the middle, and the 3, everything is right with the world when that happens. Okay? That means that you know that this is sustainable to the downside. When your 8, your 5, and your 3 are stacked, which they stack right here. And again, people might not want to wait from 142 for that to kick in. Let's call it right around here, that 136, even call it down here, 135, right? You might not want to wait for that. You might want to try the trade here, okay? You might even let the trade up into the 5 and then want to put it back on at the 5 again, knowing that the 8 and the 5 and the 3 are still stacked appropriately. It's the slope of the line, right? Remember that whole ranking system we did on this? So if we look at it from that perspective, the stacking is what's important. Now, on the flip side of this, and this is what you're going to start seeing, in my opinion, a lot more of. You're going to start seeing some of these flip. So here we are on Apple, okay? And here's exactly what we're saying. Here's the 3. You can see the 3 cutting through the 5. You can see the 3 cutting through the 8. You can see how people would have bought maybe right in here because now we're above all 3. And look at how they would have done being above all 3. Getting above all 3 is a trigger. Okay, say it again. Getting above all 3 is a trigger. Here's what I want to point out to you, right? And this is what I want you to get with this concept. I'm trying to give everybody and teach edge, right? That's what I'm attempting to do. So right here, we have an edge that most people are not going to have because most people are not utilizing this system. They're not utilizing human behavior. They're not quantifying human behavior. We are. Okay. So most people are going to look at this and go, well, I needed to get I needed that higher high. And if I can get a higher high, I'll get involved. All right. Well, you're looking at a higher high, and then maybe someone's going to be sitting there looking at this. Well, maybe we're not going to get through that. Do I really want to try that for this amount of money? Maybe I'll just wait, and then it breaks out and they buy it. And what happens? They're up for a couple days and then it pulls back. Well, with our system and the way that we're in our process, instead of us waiting here, we know that when it flips here, that this becomes a trigger. Okay. Up, pulls back. Are we worried about it? Should we be worried about it? Could it have broken? Yes, I stayed short, but I did cover some of the short right into this. I'm pretty vocal about that, I think. So here we are, right? And I covered some of the short into this, but the point I'm getting at here is, what did we stop on? The 8, okay? Then we start lifting again, get back through the 3. We're back through all 3 again. Once we're back through all 3, it's on, and you're putting it back on. Getting above them all, okay, is a trigger, period, despite the order. The significance of the move and the duration of the move increases greatly when the 3, the 5, and the 8 are starting to stack on top of one another the way that they are now. So I'm going to just stop and see if I have questions on what I just went over, because I know it's a lot. So I love the ranking and power of the moves. Thanks, Q. I didn't know if it was too basic. I can. Give me some time to go over what I want to go over, and then I'll gladly cover it. Can you go over how you position yourself with golden crosses, weekly, monthly, etc.? Yeah. So I'm going to touch base on this. Hey, Sebastian, good to see you. Lower that a little bit. Here's what I want to touch base with you on and how I view the world. Okay. If I'm you and I'm a trader, okay, I want every edge I can get. Okay. Think of it no different than how Mark Douglas describes it. We're at the casino, okay? And we want to be the casino. We don't want to be the guy sitting there with his Social Security check. We want to own the bricks and the mortar, right? We want to own the building. You have to find every single edge that you can get. And if you are out there and you are looking at stocks, and you will see that the single greatest moves that we've had, let me clean this up for a minute, just hammer this point home, because I really want to hammer this home. And then I'll get back into it. The single greatest edge that we have is understanding this particular pattern. And for me, it's using the 55 with it. But I understand what the trajectory is already telling me about this move. I already know where this is going in my head, right? I already have edge. Everybody out there that we're talking about, and I'm going to go off on a little bit of a tangent. Did CPI pick? What about earnings? What about this? What about jobless claims? Yes. Is it important? Yes. Okay. This is telling you what's going to happen. All right. The Economist 6 months from now, when we're at 750, is going to explain why it happened. Okay. I'm not an economist. I'm a trader. So I need the edge. The edge is set up a system where you are scanning for daily, you don't have to be weekly, daily golden crosses, and start finding them, and only trade those names right now if you're struggling. Okay. Only those names. And you will see a significant difference in your trading strategy. There's just no doubt about it. It's going to make up so many other mistakes that you might be making, because you're going to have all this. When you have a 55 that are pointing like this, you have all this institutional sponsorship. So it makes your mistakes less, just like it makes my mistakes less. Okay. Look at Melly. Okay. Look at this golden cross no one's paying attention to that just happened in here. A week later, look what's happening. All right. Netflix, golden cross, no one's paying attention to it. Look what's happening ahead of earnings. Look after it flipped that golden cross, how you hold the 55. It will change your trading if you're looking longer term. So I hope that helps. Q, I did a whole class on the 55 and the 22. It's all in those 3 swing trading classes. I can go over that. Give me to the end, because that can get in depth. Let's go through this. 3 are based on daily. Yes. So let's go through that again, because that's a very important question, Sebastian, to what we're addressing. And let's get back on topic. So these averages are the 3, the 5, and the 8. Okay. They are the 3, the 5, and the 8 on a daily chart. Okay. I break them down so that they fit on a 15 interval chart so that I have an edge. In other words, the edge that I have is people are going to look at these on a daily, right? So for example, let's put this blue line in. Okay. And I'll show you what I mean. So there's the blue line on the 5, right? So what we're going to do is throw up a daily chart on Netflix. And then we're going to look at that and go, okay, well, is that helping me? Well, in this case, it actually is. It's being pretty clear that we're riding the 5 on the way up, right? But then you look at all this noise down here, and sometimes it's not going to just be as clear as it needs to be. So then what I'm getting at is if I go to this, okay, on a 5, we can see how that is a little more jumbled. By keeping the same time frame of the average, right, which is a daily average, and then minimizing my time frame, I get to see the nuances that people don't get to see. I get to see how it's responding to the 3. You can see how it's responding to the 5, how it's responding to the 8. You could see these crosses, of course, on the other chart as well, but this makes it abundantly clear and makes it much more live. So, for example, someone could have looked at this on the 4th and just said, you know what, right here's my flip. I need to start looking at getting involved in this. And maybe they're buying this Maybe they're not. Maybe they're watching it and they catch it later in the day. And then maybe they're watching it run up to that level, pull back, get to the 3 and go, you know what? All we did was reject, but we're still in line. I'm going to buy, I'm going to get involved. And they get involved down here, trades up, breaks out, comes back, holds the 3, right? So this is a whole process, a whole system. Your very first interest in this is getting above all 3 of them. But this is a daily. These are all daily moving averages broken down into 15-minute intervals. So I hope that's helpful. I can get them, Q. They're in education. They're in the educational room. Hold on. I'll drop the link for you. Find that link, educational room. If you go in the educational room and you go to pinned, there'll be a playlist. Someone's been working with me on creating those. We're still backlogged, but we're getting there. So let me just drop that in there. And then just go find the swing trading, 1, 2, and 3. I plan on doing 2 more parts of it, but we'll get there. So, but I want to get these concepts down. So we get this concept. We understand the trigger. There are 2 triggers. Getting above all these moving averages for the first time. Second trigger that is giving us a more powerful durational move is flipping the 8, 5, and 3 to the up, right? 3, 5, 8 in order. And just like that to the downside. Okay, see how it flipped here? Doesn't mean that you're executing right on it, right? You might have executed this day, knowing that you're where they all are in the order. But it does give you an understanding of where you're at, that when you rally up, right, and these are all stacked, that maybe you want to short as you get up into this, right? Maybe you want to short into that. It tells you where you are in duration of the move. When you flip again in here, you can obviously try that. You can obviously buy into this, right? You can obviously see how you came down and retested that 8 and then flipped. And some people may actually buy that because it's holding and that's a trigger. And my point that I'm getting at with all of this is you can use these as triggers, right? All day long. You can use this as a trigger all day long. There's several triggers that are in here, right? And you can back test them and find out which ones work for you. The significant moves that you're going to capture on swing trades, being out a couple days to a couple weeks, are going to be this. When they are aligned like this, just leave it alone. Just let them do what they're going to do. Just leave them alone. Just let them do what they're going to do. Okay, this entire move that was captured on Boeing, look at this process from when we're in this, right? Now, did I want to buy it this day when we got back to that level? I did, but I thought we might gap fill. So I waited for confirmation. I got confirmation and we bought. Okay. Now we're up, I don't know, $20 in in Boeing of all names. Okay. And just follow the pattern. So I have 15 minutes left. I do want to hammer this other thing out and then we'll go from there. There's a lot to catch up on and I go through a lot. And what I'm trying to do, candidly, I've been trading a long time. I've been teaching for a little over 1.5 years at this point. So I'm learning too, Q. So any help is greatly appreciated on how I can make these lessons better. We have some really cool people in the room that are educators, and they've been telling me exactly how to get a little more proficient in doing this. Now, before I answer the 2-minute question, I want to flip the screen, and I want to flip to this. Let me flip to Brave here and see if it'll let me do this. Give me 1 second here. I'm going to see if it's going to let me do this or how I'm going to do this. Chrome tab, that suit the entire screen. This will let me do the screen, right? Or just do the window. Let's do the window. Okay. All right. So let's go here. Let's get some. All right. So what we're going to see here is the cloud formation. Why this is important for me that people get the cloud formation. This gives us an edge, okay? It gives us a substantial edge. And I have my beliefs on what I think is going to happen with the market, and I'll get into it in the week ahead. But this is the private clouds that we created, okay, that I put in the room. I put them down below, linked them. The color coding, I switched to be absolutely blatant. Okay, so you can change the colors to whatever you want. Purple's good. Purple signifies what, right? Royalty. All emperors use purple because it was the most expensive. Okay, my signal, purple, great. My glaring long signal is basically neon green. My glaring long red signal is in red, okay? So these are my clouds. This is the S&P, and I'll use SPX, right? And what we're going to do is just look at this on an hourly basis. I can't stress enough, and I keep putting it into the pre-market newsletter. I can't stress enough how much you should be looking at this and giving this credence, okay? Especially whether or not you're acting or trading off of it. And I'm not going to get into the whole trading of it again because we did do that and we are short on time. But just looking at this to get a sense of what's going on is going to give you an edge. And I'm going to give you an example of what I mean by that, okay? So here we are. And we're going to clean off this, and we're going to clean off the 20 EMA, right? Which was all part of that system. For those that have seen it before, for those that have not, the video is in the educational room. But here you are, and you're holding right in here, right? And you close. Oh, apologies. I switched to white because I was making thumbnails for the video. So then I go here and I click on this. Yes, we can all see this clicked on right in here. Okay. The significance of this is that we would think that we're holding support, right? And to some extent, we are holding support right in there, right? You can see this line coming across. Maybe we find another spot that we like, but we came down and we filled that gap. We filled it here and we filled it here, right? So we're feeling pretty good about ourselves right in here. And I'm just going to drill that in just there so it's even cleaner. So we're feeling pretty good about ourselves. We're not, because we have a failed H pattern, right? So we're not feeling too bad about ourselves, right? We think, oh, it's going to hold. I should probably wait before I do anything. Now I go here, go here. So now look at this. Look at the signal that you got the same day. So if you got rid of your line, right, and you were just going off your signal, well, the colors of the clouds flipped, right, from purple to yellow, from green to red, and I'm below the 20 EMA, even though I'm up. So you already have a signal. Now, I'm not saying that you would have caught this, but the day that you gap down, you know to be on the short side because all of this is going against you now. So you know which way your bet's supposed to be. Whether or not your bet works or not, right, is irrelevant. Same thing as when when you're rallying into these clouds that you need to make sure that you're getting through them, right? You're getting little short-term signals, and then you're breaking right below the signal again, right? So you have a red signal, the yellow signal, and you're below the 20. So when you gap down on December, right, you know that you're probably going lower or that your bet should be lower, right? Get this? Okay. So I'll give you another example of why this is so pertinent. I was trying to see if I could find another signal that was similar to one that I use. I think I found one. I'll point it out later. That's pretty glaring. But so here we are, right? And this is really pretty clean. I'm going to use in here because I think this is really where it is. So this is my resistance here. Support flips to what? Right? Resistance. Okay. Resistance. Kind of resistance. Tries to get over, can't. Tries to get over, can't. This is where we close. Okay. Friday, January 6th. Okay. That's where you close, right? So you can see where we're at, right? Thursday, Friday. So, well, this is where you open on Friday, I should say. Okay. Apologies. Then I go into this and I click on the clouds and I click on the EMA. Okay. What happened here? We broke out above all of them. The next bar, then we broke above support, then the next bar. All the colors changed. We have a convergence of all three, two clouds and the 20 EMA, just like we have a convergence here, and all the colors changed. We have a convergence here, and all the colors changed. These signals are glaring, and they will help you stay on the right way of which way we're going. Even if you're not going to trade off of them, use them as a sentiment indicator on which way you should be leaning. Okay. If you go take a look at Friday or Thursday and you go look at my best trades, right? They were all on the long side. All the trades that I put out there that worked the best were on the long side. All the trades where I was trying to look for the possible reversal to see if we were going to break 420 or not break 420 and pull back down, all those trades, the Apple short, I put a little Apple short on, tried a little Amazon short. They didn't work. Those little testers or those little things I did, they didn't work. What worked? When you go through it and you really take a look at it, what ideas wound up working? JP Morgan, right? All the longs. And you go through and just think about it from this perspective. Go through the newsletter right now. We don't have one real short on anymore, right? Since about here, if you really go back and take a look at the newsletter, we don't have one short on right now. And every single stock that's in the newsletter is up right now. And it's up a lot. It's not up a little. It's been a long time since we've been making 20% gains in names. So keep that in mind. So something's changing. And if you use these inflection points, it'll keep you out of harm's way. So I'm going to open it up to questions. I just really wanted to hammer those three things out. How can we access and find these clouds? They are private clouds and they are in the room. And you can play around with them, and it's a 20 EMA. Hold on one second, Sebastian. I just did this for somebody yesterday. I think I have a couple different ones. Let me see if I can find them exactly for you. Cloud. Overlay the private clouds. It was asking for this. I think this will do it. Let me just copy this link. I wonder if I can, I can pin it too. Let me just pin it to the room. And let me copy that link. And I'm going to drop this right in here for you, Sebastian. Dropping it right in the room. So there they are. Okay. So that should do it. And I think that the 20 EMA is in there. I'm not sure if it's not. I'll tell you in a moment. Let me just click it. Yep, the 20 EMA is in there. And you can play with the colors and change the colors. I think I gave access and permissions to do that and go from there. So keep that in mind. All right, so I hope that was helpful. Now, let's go back to StreamYard and get into this. Good. So now let's go through, of course, my pleasure. Now let's go back and let's answer the question of how would we enter on 2-minute charts? Well, to me, the reason I say use 2-minute charts sometimes is to get rid of some of the noise, right? How many times do you enter a trade and then that trade doesn't work? And let me show you what I mean by that. And we're going to kind of go from there, right? And you want to get rid of some of the noise, but when you execute, you want to execute immediately, right? So let's just go through something like, let's just take a look at something like, I don't know, let's do the SPY and see what we come up with here. I think this is going to give me a really good one. Yeah, it is. So we're going to get rid of all our lines and all our supports and resistances, and we're going to pretend that we don't use those. And we're going to understand what we just looked at on the hourly chart, right? And we just walk through on the hourly chart and the signal. So we know that we're long. So we know that we want to have a long bias, right? And so if we know we want to have a long bias, we're going to be looking for those long kind of trades. And we know that we broke right here. But let's just say that we go out there, we put this on a 2-minute chart. And let's just say that one of the indicators that I really like, okay, I really like VWAP and I really like the 9 EMA, okay? I really like those. So in this scenario, and I want to go long the SPY, I am going to buy the moment that I have one close on the 2-minute. Okay, this is how I would use it. I'm going to buy the moment I have one close above the 2-minute on the index. Now, so this would be my entry right there. This would be my stop right there. This would be my risk on the trade, whether it's the futures market, whether it is options. You have to quantify that yourself, right? And I can walk through that and help people with that if they're having an issue. But you see how you're flipping? Okay, now I made the higher high. Now that I made that higher high, what I would do, or what you might consider doing, is now that peak, whether it's half of that or not, becomes 50% of the stop. And this remainder becomes the other 50% of the stop. Okay? Now, let's just say that, sake of argument, this was not the entry that I wanted, but I only want to buy when it flips the 9 EMA. I'm all about the 9 EMA. I love the 9 EMA. Here's my close. Okay. You can wait for the close on the 9 EMA, or you can just buy it when it breaks above the 9 EMA. It's up to you. Let's say we're going to do the close. Okay. So I buy right there. All I do is just buy as soon as it closes. And I don't care that it's up or down. I just want it above the 9 EMA. So now I buy, right? Well, now that low of that becomes my stop. Okay. And so I'm just going to clean this off so that we can kind of go from there. So then this, right, as soon as it closes, because I like the close, we're going to say, and then that becomes my stop, the low of the breakout bar. Okay. That's it. Okay. That's my entry. How would I exit? Depends on the system. So let's say that I'm in this from the VWAP trade. How would I exit? I would be scaling out the whole way up, trimming. And I know people don't like to do that, and that's fine. Don't do it if you don't like to do it. I mean, there's several different ways to skin a cat. So you could say that I'm not going to trim because I don't like trimming. I think it's a waste. I'd rather make my money, and I don't want to trim. And I'm just going to use trend lines, right? That's going to be your thing. You're all about the trend line. Okay. So you come here and you click off of this and go, when this breaks now, that's when I'm going to exit. Hits, doesn't break, breaks right here. You're stopped out of your trade. Okay. This was your target. It didn't get there. So if you're not scaling, you didn't get anything in here, you're getting this, right? So that's something you're going to have to wrestle with. But if you're looking at this right here, then that becomes your entry. This would become your sell. That's your stop. If you're looking here, this becomes your entry. That became your stop. And again, this trigger, if you're not scaling out, becomes here, right? Now, the other way to do this is I'm going to stay in. If I did it from a 9 EMA perspective, I'm going to stay in until I break and have one close below the 9 EMA. Then I'm out. I've had it. I'm done. But I'm done with scaling because I never hold my winners long enough, or whatever the issue is that you're trying to remedy, right? So you come here and then you form a little doji and you're like, well, you're not getting me with that little doji. I'm not falling for the banana in the tailpipe. I need a real close down. Show me a real close down. That's a real close down. Okay. I'm clearly through that. I clearly don't have any rejection like I have here. Wicks or what? Price rejection. I'm down. So now I'm out. Then it flips back up. Ugh. And then it goes. All right. So I hope that is helpful. So, and if that is not, let me know and I can walk through it. Any other questions? I know I covered a lot of ground today. So, I'll break it out in chunks when I repost this. Am I still shorting? I still have an Apple short on. Yes. And I'm wrong, but I have it hedged against a bunch of other stuff, but I'm dead wrong. So the more I look at this market, I'll get into it in the week ahead. And I'll answer any questions really quickly. I don't want to keep people longer than the hour because we start to lose them. And it's not fair to the people that wanted to do the live session. But I'm wrong on tech right now. I think it's going to bounce. I do. I don't know that it's going to last on the tech side. Okay. I'm not sure it's going to last, but we're about to see some substantial moves in tech in some names, in my opinion. I don't know that it's going to be Amazon, but my short position there, I'm just not right. I mean, for the little bit that I have on right now, it's just, I'm not right. I mean, I can walk you through it so I can show you just like pretty clearly, but here, look, see that curl? Look at that 510 right there. Look how I came back, retested the 5. We just went through that, right? But now you start going through some of these other sentiment readings that in the way that they're turning. Look at the MACD. Okay. So when you see, when you're looking for inflection points, which I've been looking for down here, you want to look at MACD. And when this starts turning like this, there's very little that you're going to do that's going to work on the short side if that's what's happening. Okay. Here's the SPY. Look at us turning and getting back over the zero line. Look at every move in the index over the zero line. When you see what the breadth, I'll do it this week, but when you see what the breadth of the market is, it's just silly. Look at the NASDAQ. Okay, we're about to get back over that zero line. We're back over the 55. The 5 is now support. Okay. It's risk on right now, whether or not we want to admit that or not. That's what it is, right? That's what I'm saying. You never argue with the market. I don't want to, what's CPI going to do? What's this? I love all that stuff and I pay attention to it. It does make a difference, but it's not going to make a difference Tuesday, right? And then you start looking at these things and looking at the sentiment readings and how you're turning. And this becomes very, very clear what's happening to me. I don't think that this is rocket science right here. I mean, I think it's really clear that we're going to go higher. So keep that in mind. So yeah, I'm going to be really careful when I'm shorting. I know a lot of people are looking at this and saying, oh, we're at the 200-day. We always rejected the 200-day. Okay. And I've been saying this again, and everybody who's been with us for a period of time knows I'm usually early. I've been saying it's not that easy. It's never that easy that you're just going to keep rejecting there. And if you look at this from on the 200-day perspective, I'll leave with this and then watch the week ahead. I'll have it done by tomorrow. But if you look at the 200-day and you look at the period of time before you touch the 200 here, right? Broke out above it, came back down, last touch to here. Okay. Look at your time. Okay. 3 months, 3 weeks. Okay. So you didn't touch it again for 3 months and 3 weeks. Then you come here. 3 months, 2 weeks. Well, that's less. This is the last time you touched it. This is the next time you came up to it. 4 weeks. It's been a month. Okay. So what's happening here? We're testing the 200 more and more, and we're not making new lows now when we're doing it, right? We just need to be cognizant of that. Okay. All right. If you need me, I am around. I hope this was helpful. Any questions, reach out.